Welcome to LifeCalcs. LifeCalcs site has been established to help professionals uh, uh, determine the needs for their clients. Some professionals such as CPAs, life insurance agents, CFPs, are able to come here and subscribe to LifeCalcs in order to have access to the calculator to do a more in-depth analysis for their clients' needs of life insurance. LifeCalcs is a site where you can come, as you note, you can come and do a 30-day free trial with no obligation and no input for credit cards. At the end of the 30 days, we will then send you a subscriber, and the annual fee to have not only the access to the calculator but also storage of your clientele is $80 per year. As you can see, LifeCalcs has many areas that it addresses, that it can help you as the professional to evaluate your client's needs. It's very easy. One of the first things you do is you log in. In the login process, you will be sent, once you have subscribed to the 30-day or even the full-time, you will be given a user name and password. After logging in, it will take you to this particular page where you're able to, and we're going to want to get out of that and go to page 6, and where this particular page where you're able to recall your clientele and do new calculations if you wish to. In order to do a new calculation, you will hit Quick Calc, but before we take that in consideration, on the left hand side you can see that there are many links over here to Quick Calc as well as PDFs that are available to you. As a subscriber, some of these PDFs will be available to you. All these PDFs will be available to you, and on the 30 days some of them you'll be blocked out of and not be able to utilize. But as a 30-day user, you'll have very much access to the calculator. In order to do the calculator, you'll just simply hit Quick Calc in one of these two spots, and it'll take you to, and it will then take you to the population of the calculator itself. The calculator is in Silverlight. Sometimes it requires it to be downloaded on your computer. This is the LifeCalcs calculator. We are going to have 3 different videos available. One is going to be this. One is going to be the introduction. Number 2 is going to be an actual calculation, and number 3 is going to be an industry conclusion that I come to. In doing this, after you have gathered some information regarding the client, age, date of birth, child, insurance, just fact finding. The fact finder will be in PDF form over here. If you don't have your own, you will then input the client at this point in time. And in inputting the client, first thing you're going to want to do is you're going to want to name the client. This particular client is going to be called Client Alpha. And Client Alpha now exists in your database for you to recall if you wish to, and save and close, save and print. It will this particular client will be in your database. The client's name will be the driver, and at this point in time you will go down and you'll ask the client what they would like to do as far as keeping their family in their own world, the desired income of the family, depending on whether they're spending all their money and depending on whether they're saving any money. That's all dialogued about, and so this particular client says that in the event of his death, he'd like to keep his family in a $60,000 world. At this point in time, you come down to the next one, which is Social Security. The Social Security chart is available to you here, and you can go and do estimations off this chart, and you can direct the client over to Social Security website where they can log in at some point in time and get their exact figures. But after doing the estimation off the chart, we came to the conclusion that his earning powers have earned him and his survivors $32,000 per year throughout the Social Security years until the last child reaches age 18. So that $32,000 is going to offset the need, which means that he's got a $28,000 outstanding need. At this point in time, also, we have dialogue about what are the estimations that we're able to earn on money for survivors. And 6% in this day and age is not reasonable. Someday it might be, and you're able to come back and recalculate that and just change that one interest rate, which will change many things. in the assumptions going down the road. But for right now, the best that we could find in today's environment might be 3%, which means if we had $933,333 earning 3%, that would generate $28,000 of interest income. And that interest income could be added to Social Security, which keeps the family in their $60,000 world. That is the goal, and that is the intent here of establishing that. A lot of people want to address inflation and all that sort of stuff. No. Today, if the guy dies, this is where we're dealing with exacts and these numbers, and we're not making any future projections in any way. We're just saying, die today, this is what we can do in behalf of your survivors. So the $933,000 stays intact. Thereby, it becomes its own inflation fighter, because we can use that money along with higher interest rates to, if there's higher interest rates, to offset the family's needs, thereby keeping them in effectively $60,000 income each year. As you go on and you have additional needs, of course, you have funeral costs and the average cost of a funeral, and we will get into more details about how to populate these particular areas and itemize these particular areas as you go down in the second video. But at this point in time, the average annual cost of a funeral is about $10,000, between $7,000 and $10,000. Cremation's about $3,000 to $4,000. And for this purpose, though, we're going to use $10,000 figure. This particular client has about, all told in long-term debt, $290,000 of long-term debt made up of a mortgage and a second mortgage. And it's his desire for his 3 children to be able to put aside, in the event of his death, $10,000 per child that will get them jump-started into college. You can have college discussion on the next video, and we'll go into more detail regarding that. Some clients would like to have a reserve fund, and some clients would like to discuss other financial goals that they have set in the event of their death, that they'd be able to accomplish donations to charities and the such that could be set aside to make sure that that happens. So working backwards, we now have an additional needs of $330,000. Put that $330,000 with the $933,000, we have a total capital required of $1,263,333. If we satisfied all these debts and costs here, put $933,000 earning 3%, gives us $28,000 a year. Put it with the 32, family stays in a $60,000 world. It's important to work backwards and answer any questions as you go. We'll get a lot more detail as we go. You'll also note these little question marks along the side here are actual dialogue text and dialogues, so that you can review for training purposes, for your purpose, you can review each assumption that is in each one of these boxes, and you can actually hide those if you're working with the client, or you can have them to your access. The next thing is you have less assets. This particular client, with all the life insurance that he has added up, he has $350,000 of group term, $650,000 of individual term insurance that he's bought, and an old $50,000 policy that he's carried for quite some time, which means he's got $1,050,000 sitting there in life insurance. Again, in the video number 2, we will populate that and show you the financial statement that is indicative to those numbers. For right now, we're going to just put these numbers in here. He has $85,000 sitting in a rolled over IRA or a pension plan, and he has some savings, but none that they wanted to use at this point in time in the event of death. They just wanted to use that as a buffer, and they have some stocks, bonds, and a building lot worth about $75,000 total available to them. So at this point in time, the client's total life insurance and assets have grown to $1,200,000. As you can see here, the client now needs to add $53,333 to his present life insurance portfolio in order to accomplish staying in the $60,000 world. There's only one calculation that we haven't done that needs to be addressed, and it needs to be calculated on behalf of the client. The blackout period in Social Security is a very definite issue, and in this situation, this particular client, his spouse is 38 years old, and she and they have 3 children. The youngest is 12. And when you do those calculations to calculate the blackout period, we've made it very easy for you to put in the spouse's age, which is 38 years old, and put in the age of the youngest child, because that is where the blackout period, that's how the blackout period is calculated and runs. And so the blackout period is indicative of the youngest child turning age 18, and then the blackout period begins between her then age and age 65, when she can get Social Security again, which means that there's an additional $544,000 that gets added to this gross amount. And instead of the $53,000, now we have a $597,000 need for the client to add. The blackout period is something that definitely needs discussion about how to accomplish it, if the spouse is going to go back to work, if she's going to be able to re-enter the workforce, if she can simply live off the interest off of the money that we've left there, and that's why we left it there, so that it persists and will give income to her. She's able to take care of those needs in the long run. We will be itemizing these a lot more in number 2 video, which is going to be the instructional video about how to be more in depth with this calculator. Life Calcs has been formulated to take into consideration, in the event of death of the client and the spouses, being able to stay in their world. We would welcome any questions that you might have, and we would welcome your use of this calculator. As you can see down here at the bottom, you can take personal notes that will also get translated and transferred over, and then when you save and close this client alpha becomes part of your, I'm going to want to edit that, becomes part of your clientele. Here's client alpha, and at any point in time you can come back here and open that particular client up. It will bring you over to their particular numbers at any point in time, and you can come back and restore that information and work from that for further needs. You can also go to the print view for that particular client, and in the print view it gives you the ability to email this to the client. It gives you the ability to do a financial statement on all the itemizations that you have put in, of which we haven't put hardly any in on this particular example, and you're able to then email that to the client also. I have made a number of sales via Skype using this, so that the clients are sharing the screen and looking at what I'm looking at, and via Skype the clients are able to follow this along, and it's a great tool to use on an interactive basis that way. Feel free to, at any point in time, contact us. Please come and use the 30-day free trial and subscribe to Life Calcs. And video number 2 will go more into detail of all the tools and the availabilities to you. Thank you very much. Welcome to Life Calcs.